everyone, my name is Rick Bensignor. Today is Tuesday, August 24th, and welcome to this week's In the Know Trader show. The lineup this week in our trader education portion, we're going to talk about an indicator called market profile. Some know it as volume at price, but it really goes back to a study developed in the 1960s by a gentleman named Peter Stottlemyre. So we'll talk about that and how it can help you. In our market overview, we'll take a look at the Dow. And this week, we're going to concentrate on the energy sector. So we'll look at XLE, the SPDR ETF that represents the S&P 500 Energy Index, as well as that ETF versus the SPY. So we can look at it in relative terms. And then we'll take a look at a dozen or so of the biggest names in the XLE itself. So that's what we've got on tap. As a reminder, to get my weekly ETF tactical trader report that comes out generally on Thursday nights, you can sign up at inthenowtrader.com. This report gives a very full kind of macro view of what's going on in the markets across a variety of asset classes, as well as gives a new ETF trading idea each week. And also follows up on all open ETF ideas until they're closed out. And then we also have the 7-11 monthly SPDR sector ETF report. The goal of that report is to outperform the S&P by being in no less than 5 or no more than 7 of the 11 SPDR macro sector ETFs, which all represent, in total, those 11 sectors represent the S&P 500. And being in the right sectors at the right time is how you outperform the broad market. After our first year, we outperformed by, what was the final number? I think it was 2.41%, which is actually rather significant. And those of you who are money managers for clients at, financial consultants at firms, this is a great way and a really easy way to get your clients to outperform without you having to do a ton of work on it. So that comes out on the last day of each month so that you can be positioned properly for the opening of the next month. And we only make changes once a month. And that comes out, as I say, it'll be about a week from now, give or take, when the September 1st issue comes out. And also sign up at inthenowtrader.com. Let's just take a quick look at what's going on across those 11 sectors year to date. On the far left are the actual SPDRs themselves, up about 20.5% on the year. And what's interesting, in the last week I was away on vacation, so we didn't do a show. So what's interesting is that financials and real estate have now slid ahead of energy's returns on the year and the outperformance that didn't mean to do that, that energy has. So one thing, number one, is I will tell you, I did not expect that to happen. I thought energy would remain the best sector for the full year. Not that it wouldn't come down in its relative performance, but I didn't expect to see financials and real estate jump ahead. That's one thing. And number two is take a look at how close most of the other sectors are to the actual performance of the S&P, 2-3% on either side, except of course for just consumer discretionary staples and utilities. Tech, which is a frequent overweight and full weight, at least an equal weight to almost every portfolio manager, because it represents the most amount of percent in the S&P. It's about, 27% or so of the S&P. Very few people will go much less than equal weight on it, because if they get that one wrong, it's gonna materially impact their total results. So most people are equal weight or overweight, don't often go underweight by anything significant on that, unless you can really see a route coming on the tech side. Let's see if anything else. No, that's about it from that. So let's go back and start with and talk about this market profile. This is actually, market profile is a trademark study by this gentleman, Peter Stottlemyre. And he was a soybeans trader in the 60s on the Chicago Board of Trade, and came up with this idea of plotting how price trades each day on a horizontal axis rather than a vertical axis, to take a look at the distribution of price. And what he would see is that over most days, you'd end up with a bell-shaped curve of price distribution, such that the middle of the range of the day tended to have the most amount of volume. And if you know what kind of a normal distribution looks like from a statistical point of view, it's also known as a bell-shaped curve. You have the most in the middle, and then the tails as you get farther away from the mean, you get smaller and smaller volume. And he turned that into a technical indicator, which again, he trademarked, and you had to pay for it to get access to have the computer do it for you. Over time, different software vendors ended up essentially doing the same type thing, but calling it volume at price to avoid paying the fees that they would need to pay in order to get access to market profile. So many charting packages have something that's generally called volume at price, and it can become a very useful tool if you know how to use it. So let me pull it up here. So we're using StockCharts ACP Platform here. I went into studies and called it volume. I typed in volume by price. And what you see are these horizontal bars that come across your chart. And what they are is they cluster and represent where the most amount of volume is done. So here I went all the way back to the March 2020 low in Apple, which is where I have my cursor on here, about an inch in from the bottom left of the chart. And what I'm going to do is actually just slide this over a bit to get that low, which we all know was a significant low, just about at the far left side. So let's just do a little more. And then we'll change this over time, but I wanted to show you this. Of importance, and one of the things that you'll learn as you start to understand this model, and by the way, there are books out there on this model. Stottlemyre wrote a book himself. There's another one that I'm not sure if it's still in print. I don't remember the first name of the author, but I do remember the last name was Dalton, D-A-L-T-O-N. I feel like it was called Mind Over Markets. I think those are the two real key reference books on this. So we'll zoom into more recent activity in a moment, but I want to show you here is one of the ways to help identify if a bottom is a real bottom is to look at the distribution of price action as we make that bottom. And what you're going to notice, so these horizontal bars, there's two important things to each one of these bars. One is how far out it goes, because the more it goes out, it means the more volume that was traded collectively at a given price. And the other thing is the split between, in this case, we're showing it in green and we'll call it red bars that ACP is defaulting to, which shows how much of that volume done at any one price was done on up volume versus down volume. In other words, was it done on buyers lifting offers, which is up volume, or sellers hitting bids, which is down volume? And what we notice as we go into this bottom here in March 2020, take a look at the distribution of prices. This is all done, the price bars, or better said, these horizontal volume bars are both completely red. In other words, these are all people hitting bids. And it's the first time, if we look farther and farther back, that well, certainly here, let's go to the highs in early 2020. These were all-time highs. As we sell down here, you'll notice that on the way down, there are buyers and there are sellers, but at the very bottom, there's virtually just sellers, meaning sellers hitting bids. They're more aggressive. And that's panic selling. That's an indication here that you certainly could have a spike bottom, especially given the amount of volume done relative to what had been done before. And it's a little hard here to see both, but the volume spike up to this level was the most, just as we were making the low, just as sellers have completely thrown in the towel, right? Just get me out at any price, panic, pure panic selling. And that's one of the things to help identify a bottom, is that all these two bars that make up the lowest prices traded were all in red. You'll see that most other bars, not all, but most other bars are split between red and green, and they're not equal, but they're fairly in balance along the ways until, let's say, here, where we have almost all buying and very little selling. Same type thing, this price bar in here, all buying. And that essentially led to a minor sell-off. But you can see that bulls are back in control because they're lifting offers, right? This is all done on up volume. I take it back, not all done. But as you get better into the rally, you're seeing that the buyers are much more aggressive. We get to a point where now you see, let's call it 80% of what's being done is being done on the bullish side. And here you get a pullback from 100 almost to, well, beneath 90, so at least a 10% pullback. We have the gap, and then again, kind of fairly imbalanced between, it's not, what I'm first referring to here is not so important how wide these are, but that, fair amount of buyers, fair amount of sellers, lifting offers, selling bids. All this stuff is fairly equal. It doesn't need to be 50-50, but it's somewhat imbalanced until you start getting up here. And then you start seeing more buyers and sellers, more buyers and sellers. And well, we're tucked underneath here, but more buyers and sellers. Again, here, all buyers. That coincides with an exhaustion top. And the market went from almost, let's say 135 down to 103 or so. 30%, roughly, 25% pullback. One of the ways you can see that is that we went to full buyers. That's like shorts getting squeezed. That's get me out of my short at any price, or just get me into Apple because this thing must be going to the moon and I can't stand anymore not being involved. So one of the things that you can learn from this model is to get a sense of when a top or a bottom may be by looking at how much volume is being done aggressively in the direction of what the prevailing trend had been. And you often see something like this or something like this down here when you get to the extremes of a move. Just something I figured I'd mention to you. The other thing that you can do this and use this for, let me see how to do this. I think we can, if we just slide the chart, we're going to change these because it has less data and it's looking for, it's giving us just the data of the price bars that we see. So if we bring it now to this year's March low as the beginning, and notice the March low is made on all sellers with spike bottom. We now look at the move up, and let's see, can I bring this down? Yes, so here now we can see on the left, excuse me, right at the top where we went from, I don't know, something in the 150s, low 150s to 145, you had all buyers, and then the pullback. So again, just something that you can use in conjunction with other models that you have that might suggest when a potential trading top is in. So it doesn't necessarily have to be for the long term, which it could be, but it also can be used very short term. Now, this is just on daily bars. If we were to cut this down to, let's make this a 15-minute chart over the last couple days. And here, let's see, 8/24 is today, 8/23 was Friday. So let's bring this over, see if we could get anything out of looking at this. So this is Friday's price action plus today's. And let's cut down the bars way here. All right, so you see a big distribution of price, but no, we don't see, I was looking for, the typical day ends up making a bell-shaped curve, but we don't have enough of today in. But notice, even if you look at the highs, all buying, right? There was no red part of this bar as we made the highs today. It's just pure buying. And where are the bars from? Let's see. No, that includes some of this. Hard to, I haven't played with this particular study enough on ACP to get exactly how everything's plotted, but you can often get a sense of price distribution from the bars themselves and from the shape of the bars and where they're located. And so we know, like, kind of where this 150-ish to 149.5 range is where the bulk of volume is being done over the last 2 days. And then you get the spikes up and, where you have less volume done on the highs and often the same as on the lows. So you get, the bulk of trade. And honestly, trading into this piece, the fattest part of the bell curve gives you your least chance of making money. The best thing to do is try to identify the tails of the distribution, because usually you get some sense that you can sell the smaller volume part, which associates more to a high, and let's say buy the lower part. So if we were to draw a bell-shaped curve across this, we'd see that this, even though there's some bars missing here, this is the fattest part of the bell shape is in the middle, right? Less volume here towards the top, less volume here towards the low in the last, day and a half. So, and if you didn't have, price gaps and stuff like that, stuff would show slightly differently and even more filled in. Yeah, I'm just curious if we switch this to, let's just try. If on the S&P. Okay, so here you have the S&P. Well, this goes back too many days. Here you also have all of the bulk of the volume has been done on the top. And right now buyers can't get through there. So if you make new highs, then you expect kind of the flip side of this looking thing to end up coming up here at higher levels. But right now, with buyers not being able to push this higher, you could look at this possibly as, if you're day trading, you may fade this and look for a move down just back towards, something down in this range. Again, you've got to learn this model, spend time with it, but I figured I'd show it to you because it can be a helpful tool. And I realized I've spent way more time on this than I thought I would. So we're not going to have nearly as much time as I thought to go through the other stuff, but I'll try to get through as much as I can. All right, so that's that. Let's get to some charts. Here's the Dow Jones on a weekly chart. Similar to the S&P, the S&P is even a cleaner look of basically climbing up the conversion line from the cloud model on the weekly chart. Dow has 13 and 9, hasn't really progressed a heck of a lot since that 13 from April. It's up a couple of percent, but not a heck of a lot. And what I see is by looking at where, if we sell off, where's the convergence of different support levels, they all kind of show up in here between, I don't know, somewhere around 32.8 or so, or 32.7, and probably 33.1 or so. So that would be a couple thousand points down if we got some type of correction. Let's take a look at XLE just on its own. So 13 upside exhaustion off of this is, the secular low, the lowest low it ever traded. went and tested the stop out level on 13, didn't get stopped out. Now you have a little bit of a head and shoulders pattern. And the question is, is this neckline roughly going to hold? And notice that this neckline coincides with what was the first high off of the bottom. So there really is some support here. If it slides, then you look from 42.5 down to 37.5 is the next level. But this is kind of, there is some support here and important to see whether or not that can hold. Let's also look at XLE versus the S&P. And, it's been a disaster for years and years, the worst sector to have been invested in relative to the S&P for the last, over 20 years. Since this started trading back in 1998, you're actually down money. It's the only sector relative to the S&P that you're losing money in. So energy has been a terrible long-term hold. Certainly had a great 10 years and then has had a very poor post the 2008 debacle and the financial crisis, been the worst place to be. So let's take a look at, let's zoom in a little bit and take a look at what's going on now. So since the bottom was made, we have broken beneath the uptrend line. We do have kind of a double top, and you have the chance for maybe even down here getting in an inverted head and shoulders. So the last low made after the ultimate low was made is this red line, which we're at least for now holding above. Any other case that I can make to be a buyer in relative terms, in other words, suggesting that energy will again outperform, let's do a, let's say a Fibo retracement and see where we are. And we just last week bounced off of the 62% retracement level. So this is about as far down as you want to go. And we know we're right above support. So it's possible we get a turnaround here. If I put on a DeMark sequential model, let's do, here we go, sequential. We also have a weekly 9. Well, now I certainly have more reasons to take a stab at buying some stocks in relative performance terms. And I am advising clients to do some bidding into these names here, thinking that this could be the bottom of its underperformance, which started in late February, early March. So, so I am actually bidding for some of these names now. Let's take a look at some of those names itself. So let's just switch this and go to our first chart, Exxon. Oops, let's make this a bar chart. So, okay. And let's just put a couple of models on. Okay. For good measure. All right. So we got very overbought, obviously, the highest level that's been in a long time. It's pulling back. Weekly 8 count, to me, as long as you hold 50.6 or so, I kind of like this. And again, buying that idea that perhaps next week a 9 count, a set of 9, could be a near-term bottom. So the closer we get down towards 50.5, the more I may be inclined to buy this for a new leg higher. Chevron. Similar look, except not a similar count. In fact, last week it touched its bearish propulsion level, didn't kick in the signal. That's often a bullish sign, especially this was disqualified. So I'd lean, again, mildly bullishly, even though, MACD is still pointing down. This is above its trend line from the lowest low. So somewhere in the low to mid 80. Well, no, let's get the scaling on this. There we go. All right, so that's 92.5. This is all the way down, kind of 85-ish over the next couple of weeks. That's the area I'm going to want to see hold on this. COP, Conoco, 13.9 top, pulling back. Came right to the TDST line, which is this dotted line. That's the lowest low in the 9 count, the most recent 9 count. Got a bounce from there. This one, not sure of. I'd perhaps still wait for this to pull back a little more before I went after it. Schlumberger, SLB. These are all going to have similar looks, but different counts. This one, yeah, you've got some type of support in and around there. You're getting a bounce for now, 1 bottom, 2 bottom, maybe 3. We don't know yet. Really needs to get above kind of 32.5-ish somewhere, or I'm sorry, 32.14 to then project that this can get to the upper 30s. EOG has the 9 counts already holding above here. I'd probably go in with a half position long. And if it pulls back more, I'd wait to see, what it does versus the cloud, but I'd probably try to get some exposure into that name. Marathon. So exhaustion right to the top bar, pull back here. We're far away from support. One of the stronger charts, but we're well above support. So if you paid, if you bought it now, the only thing is you can't really manage the risk well. You're not going to stop yourself out if it takes out this low, because down here you really want to be a buyer. Better chart, but tougher to manage. Not sure what I do with that. Kinder Morgan. Lagging line pulls back to the top of the cloud. There's support here. Both the bearish propulsion level that didn't get, this one I'd probably buy with a fairly tight stop. There should be some support near, 16. So that one I would go for. Pioneer. No upside exhaustion signal, did hit its propulsion level from way back there. Bounced on the bearish propulsion level. Maybe a small long. And we'll do one last one. Let me look through all the other ones and see if there's, let's do Valero. Same thing, came right to the level that would be a sell signal. It's not. It was disqualified because this week closed lower. So also, pure trade here is to buy this and risk under a Friday close under last week's low of 58.85. That is it for this week. I hope you enjoyed the show. This is Rick Bensignor and In the Know Trader.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.